So cash flow statement, you say that is a statement which shows cash generated from operating activities, investing activities, and financing what? Activities. Operating activities include revenue, cost of sales, administrative, selling, and distribution expenses. While financing activities takes into consideration amounts received on disposal of assets, net of cash paid to acquire non-current what? Assets. Then financial activities shows the cash generated from issue of shares, loan acquisitions, and no problem. So in your format, you start with operating activities, in which case, operating activities, you start with profit before tax, then you make adjustment. I think those adjustments I can show you as we do a question. So the best you can do, let's have an illustration instead of more discussion we can do as we carry out the illustration. So illustration, check handout online. I've shared the handout with you. And there's going to be nani hapa na rafiki? Any other? You don't have a friend. They're around. So if your friend is around, no problem. So cash flow. So I say we have questions in our past paper, but those are consolidated. They are for group companies. For group, we no longer do it in the new syllabus. We do the ones which are published. So I've found some questions here on which we can literally go through. So from question 1, your importance of cash flow. B, Bongo Limited, a medium-sized trading company. Yes, a medium-sized trading company closes its books every 31st December. Given below are the comparative statement of financial position of Bongo Limited for the year ended 31st March 2018 and 2019. So we have 2019-2018 balance sheet as your eyes is capable of seeing. The following additional information is provided for the year 2019. Land and buildings were revalued upwards by 10 during the year. In addition, an acquisition of land and buildings of 40 was made. Depreciation on motor vehicle amounting to 4 was provided in the profit and loss account for the year. Motor vehicle having a net book value of 8 was sold at a profit of 3. Bonus shares of 20,000 were issued at par during the year by utilizing the revaluation reserve. Bongo Limited shares have a par value of 20. Interest expense charged to the profit and loss account for the year amounted to 8 million. During the year, tax amounting to 6 was paid. Total dividends for the year, both interim and proposed, amounted to 5. The profit after tax for the year was 8 million. No problem. Required cash flow statement in accordance with the requirements of IS number 7 for the year ended 31st March 2019, 15 months. So we start right there, Bongo Limited, statement of cash flow. Bongo Limited, statement of cash flow for the year ended, here which your eyes is capable of seeing there. right, so right there. Bongo Limited. Statement of cash flow. For the year ended when? 31st March 2019. So have two columns. Shillings are in thousands. So you start with operating activities. Operating activities. Operating activities. You start with profit after or before tax. Before. When you go after, which end after operations. Operations is within. So profit after tax, well, it's before tax, I mean. Profit before tax. Profit before tax is how much? It was mentioned. Check note 7. Note 7, they say the profit after tax was 8 million. Why? But we don't want that one. But in note number 5, they say during the year tax amounting to 6 was paid. So to get before, so we add back. So add back, take 8 plus 6 to go back and get profit before tax. So you take 8 plus 6, which gives you how much? 14. How it in the first column? Then you say adjust for. Once you say adjust for, the first item you should think about is depreciation. So right there, depreciation. Right there, depreciation. Depreciation. So depreciation is still being used. Check note number 2. Check note number 2. Okay. Kuna watu wananisumbua. Sasa watu wakishinda wana inbox link kwa group. Watu wengine shida yao inakuwa nini by the way? Where's the link? Link inakuwa kwa group. Haya. So depreciation. In note 2, they said depreciation on motor vehicle amounting to 4 was provided in the profit and loss account. Okay. So, you know, depreciation, I want you to understand this concept. Depreciation is not an operating expense. Operating expenses are usually administrative, cost of selling and so any other expense apart from these three, you do what? You add back. They are not part of operating activities. Yes. So one of them is depreciation. My main concern with this depreciation is these other assets, building and furniture. Is there any note touching on buildings? Kindly. Because you can get there as a depreciation. Land and buildings was revalued to 10. In addition, an acquisition of land and buildings was 4. Depreciation motor vehicle. What about fixtures? Are they saying anything on fixtures? Then you need to be cautious. Fixtures and furniture and fixtures at the start of the year. In fact, I want us to do a working for these 3 items because maybe for the depreciation they have only given us for motor vehicle. So I want us to reconcile those 3 as a working, then we will see what is happening. So I have a small working outside there. I want to do them one by one. So let's do a working for land and buildings. Land and buildings. Land and buildings. So land and buildings, what was the opening balance? 50? 55 in 2018, which is the opening. So land and buildings had a value of 55. Then in the notes, what is affecting land and buildings in the notes? Land and buildings was revalued upwards by how much? 10. So you add revaluation gain. Revaluation gain, that is 10. That is 10. In addition, an acquisition of land and buildings was how much? 40. So additions, they added another one. They added this one was 40. Therefore, the total value of land and buildings at the end should be this, because these are the only notes affecting land and buildings. Sure. So 55 plus 10 plus 40. 105. So it should be 105. Skip one line. The examiner is saying that the closing balance is how much? According to examiner, what is the closing value? 95. So you can tell why has the value gone down. This decrease in value of assets without any communication means these people building must have done what? Depreciated. Yes. So that's how you can get that depreciation. If they are not giving you depreciation for other assets, you can reconcile to know. So that decrease, the balancing figure, represents what? Depreciation. The BF, balancing figure, how much? 10. Good. Let's analyze motor vehicle. Though motor vehicle were given, but let's just check. Motor vehicle, what was the opening balance? Balance brought down for motor vehicle? 35. Any notes touching on motor vehicle? Any note touching on motor vehicle? Note 2. Depreciation on motor vehicle amounting to 4 was provided in the profit and loss. So this one we were given straight. So depreciation, you subtract. I want to just check whether it will balance 4. So subtract the 4. Continue reading note 2. Motor vehicle having a net book value of 8 was done what? Sold. So disposal. What was the net book value? 8. So this one was sold. So those are the only notes relating to motor vehicle. So how much? How much? It should be 22. 22. 23. So it should be 23. But examiner is saying the value is how much? 46. 46. So balance carried down according to examiner is 46. So what do you think the examiner is not saying? Big one here. What do you think is not communicating? Acquisition, correct. So when we do a reconciliation, we are getting 23, but the examiner is telling us the closing figure is 46. So that increase in acquisition. Yes. That is what they are not communicating. Acquisition of 23. I don't want to waste time with furniture because furniture you can see. Furniture, you are, Victor, you are doing the handout question. So, question 1 of the handout. Furniture, you can just see. There was no any note relating to furniture. Sure. There is no additional information on furniture. Then, when you check the balance sheet, furniture at the beginning was how much? 28. Closing. So that's depreciation of how much? 3. So let's go back to our cash flow. So depreciation will be for building we have gotten here how much? 10. For motor vehicle, we were given how much? 4. For furniture will be 3. So total depreciation will be how much? Total depreciation will be 17. So you add back 17. After that depreciation, you check, is there any asset we sold at a gain or at a loss? Oh, this should be 3. Okay, sure. After that, you check, is there any asset we sold at a gain or at a loss? Yes, there is. Yes, there is. At a gain or at a loss. Note number 2. When you was provided a profit. Motor vehicle having a net book value of 8 was sold at a profit of 3. You know that 3 will come back by income statement. Though at one year profit account, but you know they are captured it as part of income. But gain on disposal is not an operating what? Income. The only operating income we have is one, sales revenue. Any other income they must have added. So what you do, you subtract. It is not part of operation. We don't get that on daily basis. So someone is asking, Hussein is asking, what time are we people doing FM? On FM? There is no FM today. So enjoy FR as it lasts. So gain on disposal. Gain on disposal. Have you understood why we are going to subtract? Yes. We are subtracting because it is not an operating income. Operating income is only the daily sales. Any other income, you subtract. So it is how much? 3. Move. Any other income or expense which you can be able to see in the profit account. So check on the notes. If we just check any note, then you tell me what about this one. Just check the notes. There are some expenses, maybe they are there, or income, and which are not making you happy. Which one are you capable of saying? We're gonna do the same. Which one can you see and which you believe is not an operating income or operating expense? There is. Let's get what meza. Which one? Number 4. Interest expense charged to profit, correct. They are charged interest. Interest, it is an operating expense. Do we incur interest on, operating is the expenses we incur on daily operations or basis. And we have seen there are which ones? I name them: cost of sales, admin, selling and distribution. So any expense apart from those 3, those are the only expenses you're allowed to subtract as far as operation is concerned. Any expense apart from those 3, you do what? You add back. So you come here and say interest expense, popularly known as finance what? Finance cost. How much is this? 8. So that is gain on disposal. You subtract because it is not an operating income. Anything operating is the one. Common income is the income which you expect to receive daily on your daily operations. So in cash flow, it is only one: sales. Or the one which is just like revenue. So any other income apart from sales or revenue, you subtract. It has interfered with our profit, with our operating profit. So that is, I hope you have understood. So, so can you adjust? Adjust. What do you get? 36,000. From your what? From your notes. Which name do we give this figure? From your notes, which name are we giving this figure? Cash flow before working capital changes. So this is cash flow. Cash flow before working capital does what? Changes. So cash flow before working capital changes is 36. All right. Then bring working capital. Working capital, yes. Working capital, check for me these items. Okay, it is current assets and current liabilities, but you check this: inventories, receivables, payables. Not common, the last, these ones are not common. Accruals and what? Repayments, not very common. So what are you checking? You check increase or decrease. So when you come to working capital, those are the working capital components: inventory, receivable, payable, accruals. So what do you do for me? So what you do, simple. Working, unaangalia tu, was it an increase or a decrease? So go to current assets, ufanye hiyo story na uniandikie hapo. Kama ni increase, you say increase in inventory this much, decrease that much. Do for me that favor. Mbio. stock, debtors, trade, creditors. Aaron, those are working capital. So let me join. So stock the inventories, yeah. Increase or decrease? Yeah? Increase. So increase in inventory. You may increase Nagapi. We are we less. Why are we less? Increase in inventory means you are buying stock. So cash out. So this cash out. Next, kuna mtu ameleka paragraph hapo. Kwani unafunza business? Oh, he is giving us answers. Then debtors from 16 to 14 decrease. So decrease in receivables. Decrease of how much? 2,000. That one we add. When debtors goes down, so debtors not open yet. It means to not collect. We are telling them to pay, not to have jobs. Prepayments decrease. Decrease in prepayments. How much? Even that one we add. When prepayments goes down, the money so prepayment is possible you pay in advance. So if it goes down, it means come on, payables. Whatever it is here. Payables, which is creditors, 15 to 23 increase. So increase in payables, increase of how much? 8. That one we add. You know why we are adding? When payables goes up, it means you're gonna pay like in a week per day. The other primary, nakuwa pesa wewe ulipe fees. Unakaa nayo, alafu mwalimu akitoka unaonyesha watu kwa class. Sio ama pesa inaanguka. Then so you have money, you are liquid, but so kisha kuna rules. There are rules. Hakuna interest as here. Kisha. So Aaron, what is the issue? Creditors, payables, what increase, decrease? So that is it. Those are cash and cash equivalents. Yes. So get me that aggregate, start from 36. 36, adjust all that. 40. So 40 is called cash generated. Cash generated from where? From operations. I'm told this is 40. That is 40. Then you close it with the tax paid. Tax paid. So tax paid. Tax paid. Tax paid. So what tulikuwa tumepewa? So they had given us ama hawakutupatia. Note number? Tax paid was how much? So that one you subtract. Tax paid is cash outflow. Wait. Jambo kuna issue. During the year, tax amounting to 6 was paid. Na hiyo current tax wanatupea nini? Are you seeing current tax in the liabilities? Sisi hatuwezi kuvuka na kitu. How much is this? 34. Call it A. Call it A. Then we go to investing. Let us go to investing activities. Investing. Investing activities. Your tax only came, sorry. That tax is not good. You know why? Unaona kuna current tax. They are saying, in fact, let me just do what my hack is saying. Check that current, note 5, what did they say? During the year, tax amounting to 6 was done what? Paid. You know, this is very wrong when you only consider what was paid. In accounting, you consider whether paid or not paid. So if you do taxation, I will check here. When you do taxation account, just give me a minute. What was the opening balance? Liability which have not been paid. They are not paid 5. And then they are saying they have not paid how much? 6. During the year, they are saying they paid 6. So when you pay, you credit the cash book, you debit the tax account. For cash book paid, we paid how much? 6. So it means in the P&L for the year, the balancing figure is how much? So this was the tax for the year. You know, tax can be more, but you pay less. So the total tax, which has been charged in the P&L, should be how much? 7. Let's do that. Then we rectify that tax. Your tax, you only can't end up with the regulatory issue.
The cash flow statement, we put what was paid or what was income or what was supposed to be paid.
Even
for cash flow there for your taxation.
Hallelujah. Tutaongeza hiyo 7 because 7 is what they are. Profit before tax. You know tax they charge. Yes. Tutakuwa hiyo 7. You learn 7. It will be 8 plus 7. So when you adjust up there, it will be 15. So 7, this should be 15. 15. So look about 37. So increase with 1. So here will be 37. Here will be 40 what? Right? Here 41, but now when it comes to cash outflow, 6. Yes. Here you just maintain the 6 because 6 is the cash which was paid. But for profit purposes, you know, profit in the profit account they are charged. You know, profit you charge whether paid or not paid. But for cash flow, what went out the actual amount of how much? 6. So this one will be 30 what? 5. That is sensible. I want us to go to investing. So investing, before we go to investing, can you go to your notes? Go and check your notes, what you wrote for investing. Investing, if you have read, we said you concentrate on acquisition and disposal of what? Assets. So was there any asset which was disposed? So you ask yourself, how much did we receive when we disposed? You go there. So you say, cash received. So here is just master, you revolve around non-current what? Assets, acquisitions and disposal. So cash received on disposal. How much did you receive when you disposed that asset? It was note number 2. Motor vehicle having a net book value of 8 was sold at a profit of 3. You know, they have not told us how much we received, but we can get. The book value was 8. But when we disposed the asset, we gained how much? 3. Are we okay to say that we received 11? Yes. Received 11. Because they're telling you you gained. You know, gain means plus. Sure. Then, land and buildings. Read note 1. Land and buildings were revalued upwards by 10 during the year. In addition, an acquisition of land and buildings of 40 was made. Cash paid to acquire what? Cash paid to acquire land. How much? 40. That is cash outflow. Then, when we reconcile the account, we reconcile and we thought something. Motor vehicle sale. Motor vehicle, there was acquisition. We did a small working here for motor vehicle. Our balancing figure for motor vehicle. Did we get acquisition? Yes. So cash paid to acquire motor vehicle. It was how much? 23. It was 23. That is also cash out. It is all about non-current assets. So give me the answer, then we call it B. There? Stop. There? Oh, wow. Ushule kidogo. So you get negative 52. Alice, what are you talking about? Let's just at all. What are we not having? Which B? This is a or equal. What does I want to say? Simon, equal. What else to learn? Equal. Which B are you talking about? See, format ndio pea yote. Yeah, indirect method alafu tukaenda direct. Direct ndio muliandika 2A alafu nikasema financing and investing as the two formats. Hakuna. Unajua nani kuna message alikuwa anasema jana. Unajua si kwani nyinyi mmechoka? Ni nini hakuna? Kwa hiyo format hiyo investing at the financing, why not? Investing activities, cash received on issue. Oh, huyu mko sawa? Huyu. This person wrote bad things. Oh, huyu aliandika vitu za financing. Oh, so I'm sorry for that. Oh, so whoever wrote notes, I think I could capture visuals, but now you are capturing. So, so investing, you just concentrate on non-current what? Assets. What you're going to boom? What you paid to do what? To acquire, and what you received when you disposed. What you paid to acquire and what you received when you disposed. Then now we go to finance. Financing, concentrate here. You concentrate on equity and liabilities. Equity. So from equity downwards. So, equity downwards. Equity downwards. So, secure for equity, are you using ordinary share capital and share premium? Ordinary share capital and share premium, you reconcile those two accounts. You reconcile those two accounts to get shares which were issued. For example, if you combine them, you know those are one family, share premium and ordinary. When you combine the beginning, it comes to how much? 365. Then ukienda hiyo side ingine 100. So it has increased. Beginning was 65, closing is 100. What can make shares to increase? The issue. And we issue for stones. We issue for cash. Yes. So you come here and say, cash, you hata usumbukange kufanya wapi, ni straight. Unafunga tu jicho ya beginning ni gani? Sasa Jojo wewe umefunga zote. Jicho ya beginning is which one? The right or the left? The right. The right your beginning. Unafunga jicho ya beginning alafu ingine. Then you can. So don't waste time for it. So cash received on issue of what? Shares. So closing Nick, 80 plus 20 minus 50 plus 15. So that difference is what they issue. Steve, no, Julius, okay. Does revaluation affect investing? No. When you revalue assets, kuna pesa unapata ukiita value, kuja uniangalie shamba yangu ni pesa ngapi? Akwambia sasa imegate na 200. Kuna pesa unapata? No. So revaluation will not affect at all. Like so, watu wanifikia wanasema am I able to join? Hiyo ya reverse. 100 minus this 35. So 35. So Steve, as I've said, so tuteremke tu na hiyo equity revaluation. When you revalue your assets, there is no cash which you get at all. So retained profit should help you to know how much dividends you pay. What is dividends, by the way? Dividends is the decrease. Decrease in what? In retained earnings or profit. When profit goes down without communication, it means those people have paid what? Dividends. But now we are not going to disturb ourselves because of note 6. Check note 6. But we are going to be keen. Note 6, they said what? Total dividends for the year, both interim and proposed, amounted to 5. That is total dividend. They are not said paid. So to get paid, this is what you will do. Let's have a small working outside. Why are we destroying the name of working? Check your current liabilities. This is something you can understand. Check current liabilities. Are you seeing proposed dividends? The last item. Proposed means not yet paid. So at the beginning, they are not paid how much? 4. No. During the year, they have said there's another one amounting to how much? 5. That one which is in note 6. So at the beginning, they are not paid 4. During the year, the total dividends for the year amounted to 5. So it means if they have not paid, at the end of the year, the dividend should be how much? 9. 4 plus 5, 9. But examiner said no, the value is how much? 3. So they paid how much? 6. As simple as that. So upon waste time, we come here and say dividends paid. Hey. Beginning, they are not paid 4. During the year, again, they are supposed to pay 5. So total, they're supposed to pay 9. When the examiner is saying what has not been paid is 3. So they paid how much? Very good. Next item, under equity, retained profit is over. Retained profit is over. Go to non-current liabilities. Go to non-current liabilities. 10% debentures. How much was the debenture when we started the year? When we started the year, debenture was 20. When you are closing, debenture is what happened? Ask your neighbor. What happened? Debenture you made a joke. What happened? So we issued more debentures. Now we issue debenture. So unapata pesa, wanakupea pesa. So debenture is certificate. You give them, they give you money. So increase in debenture means they see. So cash on issue of debentures. What if you get a chini? You call it debenture repayment or redemption. Eh? One and the same. Either they redeem or they pay, which is cash outflow. So decrease in loan is payment, increase is cash in. How much is the difference? 10. That is positive. That is cash in. Next item is bank loan. How much was the loan when we started the year? Loan when we started the year? 10. At the end of the year, the loan has gone to how much? 6. What happened from your assessment? They paid. So we paid the loan. So loan repayment, the difference. 10 minus 6, isn't it? 4. Cash outflow. So now ukimaliza equity and non-current liabilities, the only thing remaining is interest. Peke yake. You subtract interest here. So I think interest paid. Interest paid. Are you seeing interest payable under current liabilities? Are you seeing interest payable? Yes. So payable means interest which had not been paid. How much was outstanding at the beginning? 6. Check note number 4. Interest charged. You know, charge has not been paid. Eh? Interest charged in the profit account for the year was 8. So when we started the year, we had not paid interest worth 6. During the year, we were charged another one of how much? 8. Meaning we are supposed to pay 14. But examiner is saying no. What remained outstanding is how much? 9. Meaning they paid 5. They paid 5. We shall. So far. Is that bad? So we are looking for C, yes. 30. Positive. Hauko sure. Lazima 30 utasikia watu waongei. 30. So I hope bank overdraft, no? Just counter check. Payables, no. So you're saying this one comes to 30? Yes. Positive. Yes. Please. Kasirika. Niambie. So this is C. A good net cash flow. Net cash flow, you check A plus B plus C. Check note 3. Whether kidogo Rose. Check for me note 3. I think we oversight about it. Check for me note 3. It's going to bring a problem with no. I don't think. Note 3, what are they saying? Bonus shares of shillings 20 were issued as per during the year by utilizing the revaluation. So you know bonus are free shares. So the fact remains, shares will go up, but no cash you are getting. So it will affect this one here. Cash received on issue of shares. Yes, beginning was this and this, but there was bonus shares. So bonus will increase the number of shares, but no cash. So here you need to top up. the bonus. How many? 20. You can indicate bonus. This 20, this one. Indicate in your books bonus for your revision. This one is bonus. There are bonus shares. So bonus you need to top up. So if you amend, it will be how much? Huh? What did I have? What's that? No. I think management is not good. We had IV. This thing should go this way. If I do it form of working. Brought down balance. Brought down was what plus what? Combine with the two. 50. 50 plus 15, which is as the year was progressing, we topped up what? Bonus of 20, meaning we are supposed to close with how much? 85. Then carry down is 80 plus 20. We close with how much? 100. So they increase. It increased by how much? Issue of share. And I think we're supposed to add to the open. So 15. I think that one now makes sense. Online, we started with this and this. Then during the year, we talked bonus. Meaning the closing of the year, you're supposed to be having 85. And then they are saying we have 100. So that increase of 15. Capture it there. All right, so cash on issue of shares, we have changed. Instead of 35, we are talking of 15. Can you amend this? Then we finalize. How much? Positive. Positive 10. So do for me A plus B plus C. Combine. How much are you getting? A plus B plus C? 97. Oh. Negative 7. 7,000. So 7,000 negative. Unajua by our cash flow inakuwa na answer. Ukiwa wrong utajua tu. So andika hapo opening cash and cash equivalent. Then you will get closing cash and cash equivalents. Good. So I have a small working outside there. You say cash and cash equivalents. That's the last thing we are doing. Then we go to the next question. So right there, cash and cash equivalents. Cash and cash equivalents are things like which ones? So this is 2019, 2018. You take cash in hand. So hapa tuko na bank and cash in hand. So bank and cash in hand. Check your current assets. So bank and cash in hand. How much? How much? Nothing. Nothing and 3. Short-term investment. Kuna investment. Ukipata investment for current assets, that is a cash equivalent. You know, cash equivalent is anything which can be converted into cash easily. So if you get investment, current investment, though it's not here, just indicate current investment or financial assets ukipata for current assets, those are cash what? Equivalents. Then bank overdraft. Bank overdraft is a negative cash equivalent. How much? Check it under current liabilities. How much? 4. So this is 4, but you subtract. This one is nothing. So cash and cash equivalent at the beginning is this one here. The 3,000 positive. Then cash and cash equivalent at the end is negative what? 4. So if you want to know you are accurate in cash flow, if you take this, yes, the net cash flow, if you take this, you add to beginning, it should automatically give you the closing. That's when you know it as reconciled. So you take negative 7 plus 3, that's negative 4. So we are accurate. So this is 3, this is 4. So it has reconciled. In exam things happen. In exam ukifanya A plus B plus C unapata 0. Ukiadd hizo tatu kuna 0. Na ukifanya cash and cash equivalents unapata 3 and 4. There is no way 0 plus 3 will give you negative what? 4. So what you do, you don't panic, neither do you delete what you have done. Kuna kitu mingi ufanya vizuri. So what you do, finish with the correct answer. Weka the correct answer which you have gotten. Wake up with your 3. Then you say X. Sasa tunasema hii ni X. Are you listening to the strategy? X minus plus 3 is equals to negative 4. Weka tafuta X. Weka hapo negative 7. Ajipange huko ndani. Ndio umeelewa? Bas. I want us to go to question 2. Hiyo imeisha. People theories, if necessary, I'll write after Isabu. So go to question 2B, and I want to give you a few minutes to start, like 5-6 minutes. I want you to start for me, question 2. Just pretend you are starting. Can you try that question out? Try out that. Then I join. There is no harm in trying. Kick off, just kick off. I'm here. Oh, sawa. Abigail, you want to see the board? Sawa. Umesoma kabisa. Sasa hivi unataka naona kwa financing activities. So can I join? Let me join. Kitu moja ni kushinda, ukaje swali yote, sasa swali yote. Unajita nani? Vipi? the year ended when? Perfect. Shillings are in. Profit before tax is how much? Eh? 23,900, correct? Seven. Then adjust for zero. Just for what? Depreciation. Are we given depreciation for this year? Not number two. No. 80. 80, 20. You add back. Is there any asset which was disposed at a loss or at a gain? You don't know. Number three. Yes, that is the, I think it is the only serious issue in that question. The other I was saying, during the year, land with original cost of 13.8 was disposed for. You know, that was the cost. When you want to know whether you lost, you gain, you don't compare cost. You check the net book value. So, average what 1380 minus 820 loss. Come on, you style. That is a serious issue. You must get the depreciation on that what asset which was disposed. Yes. So once you have the depreciation, which you put 1380 minus depreciation, you get net book value. Is when you compare. So allow me for now to check first the depreciation for that asset which was disposed. So to get the depreciation on disposal, what you do, reconcile depreciation. So we say depreciation. Say there depreciation. Then you say balance brought down. How much depreciation was there when we started the year? Oh, EV. Yes. It's not like that other one. Eh? So balance brought down 2019 was 14,960. Then P&L for the year. We have been told they charge how much? For the year, we were told they charge 80/20. So 80/20. Can you add for me the two? Add for me those two. 22? 22.98. Skip one line. According to examiner, how much depreciation is there at the end of the year? 22. That decrease is the depreciation on what? Deep on disposal. Depreciation on disposal. Of how much? 48. So the asset we disposed had already depreciated with 480. What was its cost? So net book value of the asset disposed. 900. What minus what? 1380 minus 480. That's what you put crucified. Where are you getting? That is how much? 900. So the book value of the asset disposed is 900. Then 900. Then we sold it for how much? For Net book value 9. Cash received 820. We lost, we gain. We lost. So loss on disposal, how much? 8. Mbona hiyo statement? Yes. So what the concept, yes, but when you want to know whether you lost, you gain, you check the net book what? Value. So net book value, you check the cost you subtract depreciation. So they denied us the depreciation on what? Disposal. So you reconcile the depreciation account, get depreciation, subtract, check. Next one. Stop. Right. So loss on disposal is 8. Add back. So come here and say loss on disposal 80. Add back. Note number 1, obtain a 5-year loan. We don't want depreciation, we don't want. During the year plan, usually we are done. 3 or 2? Yes. So can you add? So don't worry. This question, nataka tufanye na nyinyi. You do as we do. Ndio mtu anaona makosa. In case they try to try, then tuko na wao. How much? 32? That is cash flow before what happens? Cash flow before working capital changes. Working capital. Give me the working capital. So working capital, in this question, there is no prepayment, there is no accrual. So what I want you to do for me, check for me, creditors, which is payables, inventory, which is stock, debtors, which is receivable. Those 3, check for me increase or decrease. So what for me the working capital, increase, decrease. So analyze those 3. Then you give me the answers. I'm just here. But you can discuss, no problem. Online, you can just work it out. With those minutes, you should be done. Where you have speed. Very fast. No. Inventory, but increase or decrease? Increase, eh? So increase. Just one in the buyer. Another arrangement. Nenda hivi. Alafu unafanya kukuja hivi. Alafu kwa exam unasema, at least Cashflow ilikuwa nikalia class lakini leo. Kama rafiki yako anakuambia, however, kama mtu angeona kwenye hizo miaka zimepangwa. So confirm for me this answers from Nina. She's saying increase in inventory is 12,800.
Yes.
Increase in inventory 12,800. We are less.
Yes.
Receivables, she's saying decrease of 220. Hiyo ni payable. Receivables anasema ni increase of 740.
Yes.
So increase in receivables 740. We also less.
Yes.
Then anasema payables is a decrease of 220.
Yes.
So decrease in payables to 20. That one we also less. So decrease in payables means we kazi yako ni kulipa madeni. So hauna pesa. Misha. So 32 hiyo yote 18 to 40. That is cash generated from where? Hizo majina hata nikusumbua usijisumbue. Cash generated from operations. Then we say tax done what? Paid. So tax paid, we angalie sikulete kisho kama ile nyingine ya kwanza. Tax wame mention wapi? Where have they mentioned tax? Kuna accrued. Are you seeing proposed taxation? Are you seeing tax and current liabilities? Huh? How much was tax at the beginning? 94. Did they mention tax in the notes? How much yet or not? For profit account, are you seeing corporate tax in the profit account? How much? So tax will go this way. It will be at the beginning, tax was how much? 94. During the year in the profit account, they said the corporate tax is 12,040. But at the end of the year, how much remained outstanding? 12,040. So it means what they paid was this. So this is what was paid. So this plus this minus this is this one. So this was at the start. This is during the year in the profit account. This one is the closing. So they paid 90, 94. Add, give me there, okay. How much is that? Huh? 88. I'm not calculator, you think? I hope that is okay. Let's go to investing. So try and relax kidogo. Hebu mujaribu investing. Try investing out, please. Try out investing. Try out investing very fast. So I think you should have seen. Investing, we said we concentrate where? On current assets. And what are we looking for? You know, you can concentrate, you just sit there. What are we looking for? Cash on disposal and cash paid to. Right, sure. So investing. Investing activities. Cash received on disposal. They received how much? Huh? 820. Cash paid to acquire. Cash paid to acquire. What did we acquire? Plants. How much did we pay to acquire plants? How many percent? Kama kusema lazima tufanye reconciliation. During the year, national 5, no depreciation. During the year, hey, they never said, eh? So let's do a reconciliation for what? For plant. Freehold item. That was revalued or something. So plant. Let's have plant account. If they don't give, you have to. So plant. You say balance brought down, less depreciation, less disposal. Then we compare with the book value. Balance carried down. You'll get it very well. So cash paid to acquire plant, brought down plant at the start was how much? You need to bring the net book value. Bring the net book value, not the cost. It is 39,040. So, yes, you captured the 39,040, the book value. What was the depreciation for the year? 80/20. You subtract. What was the net book value of the asset we disposed? We just worked it somewhere here. It was 900. Yes. The book value of the asset disposed was 900. Correct. So what should be the closing? Base minus depreciation minus disposal. How much should be the closing? The closing should be 30 and 20. According to examiner, what is the closing? Closing for plants. 54, 120. So that increase is what they acquired. So acquisition, how much is that? 24,000. So let us put 24,000. That is cash outflow. Then there is nothing actually. So just add for me the two. Land. Freehold land. Freehold land. What was the opening? 18. Then mwisho land again. 22. 4. In the notes, did they talk of land anywhere? They did not. And check for me the check for me the balance under equity. Check your equity. where we have revaluation. Can you check movement in revaluation? Come on, year 4 year. Can you check revaluation? Actually, it's the second from top in the balance sheet. Here. Revaluation at the beginning was 2.5. Closing is 6.5. So there was a gain of how much? 4. So that is it. So how much is this? Negative something. Negative 21. 23.1. 8. Call it B. Financing activities. A good work. Try out. You can even check what we did. Then you try out. Yes. Can I join? Help. Joining means we go to equity. Sure. So we go to equity. Ordinary kwanza tuna combine na share premium. Na kuna bonus, so in direct. Ordinary and premium at the beginning, we combine 14,800 plus 3. Sure. Yakuja 17,800. Then closing 18. Again. You increase the gap. You increase your issue. Issue of new shares. Gap. 58. And opposed. Because I want to get dividends. Dividends. In the goods of money, or not? Oh, very good. Check the profit account. Check your profit account. In the profit account, are you seeing the total dividends to be 52? That 52, you come and say dividends paid. Dividends paid with me. What minus what? What plus what? Beginning. Are you seeing proposed at the beginning? Proposed beginning is how much? Been changed. During the year, you are seeing 52. Closing, you are seeing 34. Oh, then you are saying that one 52 minus 46. After that, loan. Loan was how much? 3. Loan ikapanda mpaka ngapi? Kama? When the premium. How much was the loan? 84. 84. Loan went to 52. We paid.
No, there's
not one. Okay. During the year, obtained a 5-year loan of 13. Okay, 13, it a balance. Here are more key, because at the start, balance brought down for loan was 84. Loan acquisition 13, meaning the loan should be 97. And then they are saying the loan is how much? 52. So now loan repayment. Yes. Loan repayment. Loan repayment. Loan repayment. Get for me the difference. 45. Wake up 45. So loan repayment 45. Makini. Are you 13? We have reconciled. IRS will see. Damakli, we're getting 28. Dividends 28. Shut up. Dividends 28. 28 is the proposed at the start. If you can see 34, you can see 28. Check your liabilities. Then after loan, after loan, we check interest. Was there interest in this question? No interest, nothing. Then loan repayment is negative. Can you try to add? Try to add. So that is 58 minus 46 minus 45. I'm getting negative 33. So negative 33, 100 C. So what is A plus B plus C? Net cash flow. Net cash flow is ABC. ABC is 8840 minus 23,180 minus 33. Napata 17. 76. Negative. My heart is not settled with this financing. Your financing, we have to capture those two things. You know, we acquired a loan, so you can acquire and pay at the same time. So the one we acquired, the 13. Yes, in my view, we acquired, then again we pay. So the one we acquired must be a plus. Sure. Loan acquisition, fix it here. Loan acquisition, they acquired a loan of 1,300. There was loan acquisition of 13. So if we go like 33, minus 33 plus 13, 2,000. So this one will be -2. If this is -2, then A plus B plus C will be how much? Which was the issue?
We used that 13 to get 45.
Yes, we use the 13 to get 45, but what is the interpretation? Also during the year. So during the year, you can get loan,
Yes.
by the time you are paying it is, I know what you acquire is not exactly what you're going to pay. So you come and your concept.
What platform means there was a loan at the beginning.
Loan at the beginning was 84.
Yeah.
Then we acquired.
13.
When you acquire a loan, what do you do to the cash book? It is cash in.
Yeah.
It will still be the same thing. We started with a loan of 84. Then took a giza loan in there, 13. See, that is cash inflow.
Yeah.
At that point. Then tukifunga, tulifaa kufunga na loan ya 97. Tukifunga loan imekuwa 52. So we paid, it means we paid how much? 45. So by the time you received, it was during the year. So you receive this one is a cash inflow. Then when you pay, it's a cash outflow. I think it's direct. It's not making sense, but it's very down.
Maybe you can explain it using the layman's language.
Oh, layman. Layman lewa yuko. Yes.
Or let's say maybe is
Jackie amesema she's around. What you kuna loan ya mtu ya 100 bob, kuna loan ya mtu ya 100 Januari, tukianza Januari.
Yeah. Alafu ukachukua another loan ya 50.
Akakupea another 50.
Yeah.
So akakupea another 50, what do you do?
That is like kuna total loans of 100.
For cash flow sasa.
Yeah, unapata pesa. You have received the money.
See, it's cash flow in.
Yeah, and then
Naenda
ukalipa one of those loans. Either
40.
This one ukalipa 40.
Itakuwa cash out.
Yeah.
So you add the one you receive, then subtract the one you pay. Because cash flow records cash in, cash out. Yes. So we received 13. We received 13. Then we pay 45. So yes, sure. So 2. So if you say 2, this one will be how much? Yeah? I'll check if you're saying 16. 040. 340. Negative. Haya. Pamoja kusema ukweli kuje. Opening cash and cash equivalents. Opening cash and cash equivalents. Let me see what James is saying. It is adding plus the opening cash and cash equivalents. I think you are responding to Kelvina. So cash and cash equivalents. Now I'm not going to do the working. How much was the cash balance? Cash at the start. Ndio mwisho huko kwa balance sheet. Cash at the start. Are you seeing 1020? Are you seeing it? Was there overdraft? Bank overdraft also at the start. It was 0. So you are supposed to subtract the overdraft. So take 1020 minus 0. 1020 minus 0. So 1020 minus 0 is what? 1020. If you take this plus this, what do you get? Then we compare. Negative 6340 plus 1020. Negative 320. All right, so let's check. Closing cash and cash equivalents. All right, closing cash is how much? 0. Are you seeing? So cash at the end is 0 minus overdraft at the end 15. 0 minus that is. So it has balance. Finally. Haya. Hiyo ya tatu mutafanya. But there's something I need to clarify just in case ikuje kwa mtihani. It is dangerous. In that question, check number 3. This one you are doing class imeisha. Check question 3. Unajua kama mtu alikuwa na usingizi ukisikiana mtu akisema it is over, pia inapoteanga. So question 3, the following statement of financial position was extracted. There's something about it I want you to check. The books of Jashu. So it's there. There was no disposal of non-current assets. Shillings 10 million of debentures was redeemed. When you redeem, means you are paying the debenture. So it's cash what? Outflow. During the year, a dividend of 17 was done what? Proposed. So to get dividends paid, you take beginning plus the proposed minus the closing. Sure? Yes. Taxation of this was agreed. Fine. Do you know what is missing in that question? Profit. You have not been given what? Profit. So what you will do, you will reconcile retained earnings account. So you will check. Unafungua retained earnings, brought down, and carried down. Then the difference in the retained, you will adjust. You adjust for the proposed dividends for the year. Once you bring for the year, other year to it affect. Then the difference is the retained earnings. What I can do, speaker, niko na hiyo solution somewhere because nilifanyanga wengine. Siliwatumia hiyo solution, but you can check for question 3. Sure. Yes, so I'll tell you how to get the profit. That profit, how you can get profit. Actually, that profit, what you do to get profit before tax, you get the difference in retained earnings, opening and closing retained earnings, the difference. Then you add back proposed dividends. Then once you add back the proposed dividends, you also add back the tax. Sure. Hivyo tu. Siniwatumie tu sahi before ni sawa, nimeona iko hapo. Can I send?
Yeah.
Yes. Yes, kusema na nguvu. Yeah, let me send for you that one right now. Mpumzike nayo. Wanaweza kosa kuwapatia hiyo nini? Hiyo nini? They can fail to give you the profit. So in case you are not given profit, this is how you do it, the way I've shared. Najua watu wa ya wanasema ya ndio tusifanye. Yeah, very fast. Tumalize. You don't want a lot of stories. Lakini mmeshoka. Ama kuna mtu hajachoka hii wiki? Siara nyumbani kuna mwenye ananiongelea vibaya. Kwani unalikuwa hiyo? Anafikiria kazi hii tu kwa hii dunia ni kusoma. I'll share solution for that question 3. So you can just go through it pole pole. Those ones are enough. So our next topic when we meet in our various classes is branch accounting. Day I think your labs litokea wapi? Because they were evening and morning wako at par. They go behind with one. Oh, ile siku kuja class, mko nyuma na one class, 2 hours. So alimoni na evening tukifanya branch tumaliza the entire file. Evening you will have to do ratio analysis. So ratios ni one. So tukifanya na one class. Yes, so ratio ni one class, which we have a makeup on Tuesday. So it's still okay. By next week we have a photo. So Anika, branch accounting. What? Tutaanza na branch, all of us, wherever class you are. So branch accounting. But bado day watamaliza mbele yao wengine. So we still finish ahead of you because they have more classes in the week. So they still finish ahead. So branch accounting. Wow. There's nothing which makes me happy like finishing everything. Because inakuwa ngumu lakini sasa hata ukiletewa cash flow, wewe sema this one no. Felix tajaribu. Yes. So thank you so much. You have a nice weekend. Continue enjoying your weekend to the fullest. Thank you. Online I want to end because I was recording. You want another class?